Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of monthly supply and resistance, actually historical supply and resistance. From here, in fact, all this previous rejection to the downside was created. Again, here, the market tested its zone and started rejecting it to the downside. And we can see how at the moment the market tested exactly the same zone, already started rejecting it to the downside. So from here, we could expect more bearish continuation away from this zone. So here on the monthly, everything seems very bearish. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, the price action is quite clear as well. We can see how the market created a first test of this zone here, started rejecting it to the downside. Again here, the market tested its zone, started rejecting it to the downside. Again here, the market tested its zone, already started rejecting, and more bearish price action could be expected away from this area, since the market has actually created a triple top at this zone. Going down on the daily, this is where things start to get a bit more complicated. Now, first of all, I did speak about gold quite a few times here in the past. I spoke about gold when the market was here. I explained all the reasons for which we could expect this rejection to the upside, and that is exactly what the market gave us. Then from here, I made another breakdown explaining all the reasons for which we could expect first this correction, and then more bullish continuation, which is exactly what the market gave us as well. Then after this impulse, I explained all the reasons for which we could expect from here a correction, a higher high, and then a rejection to the downside. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. Now, as I was previously saying, however, in my very last analysis, I explained why we wanted to see the correction retest of this previous daily support turn resistance, and then the start of a rejection to the downside. Now, the market started giving us that with the creation of the impulse and correction here. In fact, from here, we had this first impulse correction as we wanted to see, started a rejection to the downside as we wanted to see. However, the market has now stopped at the previous low. Now, this changes things quite a bit. In fact, this actually means that the market is now currently stuck in a range. So that is why I'm making this update on the situation that we currently have here on gold. In fact, with the creation of this rejection, essentially the market has entered into this range here, having the top of the range acting as resistance and the bottom of the range acting as support. Now, until the market here will remain in between this resistance and support, so essentially until it will remain in a range, it could easily reject either to the upside or to the downside. If the market would break to the upside, at that point we could expect a deeper test of the monthly resistance that we have previously identified, and only at that point we would see the move to the downside. On the other side, if the market is actually ready to create the move to the downside, at that point, what we could expect is a break below the bottom of this range, which is currently acting as support. Now, also in that case, in the exact same way, if we get a break below the support on the retest of this previous support, which at that point would become resistance, that is where we could expect the potential rejection to the downside for the creation of the rejection of that monthly resistance that we have previously identified. It's also important to point out that even if the market will create a move to the upside or to the downside, in both cases, we will have also the confluences of the Fibonacci's. In fact, if from here the market breaks to the upside, we must take our Fibonacci from the low to the high of the impulse, and at that point we would have the 0.32 and 50% retracements lining up with this previous resistance turn support. In the exact same way, if the market breaks below this support, we would have to take our Fibonacci from the high to the low, and we would have the 0.32, 50%, or 0.618 Fibonacci retracements, creating confluences of resistance and support, respectively, at these two areas. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for gold, what we can see is that with the last reports, net positions are getting decreased. We went from having a 195k net positioning, now we're sitting at 189k net positioning, so clearly net positions are getting decreased with shorts getting added. In fact, we can see 2.7k shorts added with the last report and 100 longs getting closed. So clearly here shorts rose from the 63k that we had here to now 70k shorts from an institutional perspective on gold, and longs are currently getting decreased, going from 266k to currently 260k. Now, this signals that institutions are starting to move to the bearish side of gold. So that is why I'm saying that even if we get the break above, this would be a shorter move to the upside for a deeper test of that monthly resistance. Before then, there is the potential to see a more bearish price action being developed. So if the market will create this move to the upside or to the downside, how we could be approaching these respective moves. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is if the market will break above this zone on the retest, monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. And in the exact same way, if the market will break below the zone after the break on the retest, we could be monitoring price action from an intraday perspective. And if the market will shift from an intraday bullish to bearish market and provide to us one of our valid entries, we could be looking for a potential move lower. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have the possibility to gain lifetime access to the mentorship program with a huge upfront discount from $497 all the way down to only 97 euros. And since I have partnered with the forex broker Blueberry Markets, if you have an account with them after you join the mentorship program from your student dashboard, you can get a full refund credited back into your trading account if essentially you move your trading to their platform. And if you scroll lower, you will see that there is still time to join before the timer goes to 0 and this offer expires. And you can join directly from here by clicking on this button in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.